Hey guys, this is Duhanci from Performance Tactics. I just wanted to make a video here because I'm hearing a lot of talk on Twitter and other social outlets about BTC, Bitcoin bottoms, and buying the dip. And I just wanted to share my thoughts on when I think the right time to buy that bottom will be. So a little about me. I'm a futures and equity options trader. I do this full time and have been trading for over 10 years now. The things that I've learned in these markets, the principles, apply across all asset classes, and in this case, cryptocurrencies. So before we dive into it, I just want to say that if you're a trader like me, flipping in and out of positions, sure, by all means, you want to capture short-term bottoms and sell short-term tops. However, if you're an investor, buy and hold type, your strategy has to take certain contextual themes into consideration. What are these contextual themes? Well, simply the Federal Reserve, and what they are doing in terms of monetary policy. Financial cycles, whether in stocks, cryptocurrencies, real estate, art, or NFTs, will all be dictated by the stance the Fed is taking in terms of monetary policy. In this case, ever since COVID, in response to it, the Federal Reserve printed a ton of money. Over 40% of the money the US has ever printed in its history was printed in 2020. Let that sink in. 40% of the money the US has ever printed in its history was printed in 2020. It goes without saying that the Fed, in this case, and even in the years before, was in an easing cycle, maintaining low interest rates and adding money into the economy. So what does this do? Think about the economy as a pool. One that's full, half full. A pool that's half full. In 2020, the money that began being injected into the economy began filling up the pool with more water. And therefore, anything on it, anything that was on top of that water, began rising up with it. In other words, this additional money that was being added into the economy found a home in risk assets such as stocks, cryptocurrencies, art, NFTs, real estate, and other similar places, lifting the prices of these assets higher. However, as time went on and people got more and more euphoric, things got very overheated. And price levels got so elevated that our inflation data began coming in hot. And therefore the Fed, since the start of the year, was forced to raise interest rates in order to tame it, in order to bring inflation under control. So here I have a chart of the S&P, the SPY, the S&P ETF, along with Bitcoin pulled up. Since the start of the year, which is indicated by this vertical line, January 7th, 2022 on both charts, as the Fed began talking about raising rates, since the start of the year, as the Fed began talking about raising rates, the liquidity or dollars in both of these asset classes started to get sucked out, started getting drained or removed, and therefore prices started to come down. As inflation got hotter and talks of raising rates amplified, the market gained more and more momentum to the downside. So on the S&P, we're currently down a little over 20% off the highs, off of the early January 7, 2022 highs, and 60% for Bitcoin. Now, the reason I say all this is because when trading or investing, having an idea of the overall context we're in is key. Keep an eye on the Fed and what they're doing in terms of monetary policy. Very simply, whenever they're in an easing cycle, when they're keeping interest rates low and doing QE, adding money into the economy, asset prices will inevitably rise. Think about that pool. It's like filling that pool with more water. Anything on top of that is going to rise with it. On the flip side, when they're in a tightening cycle, when they're raising interest rates and doing QT, quantitative tightening, they're removing money from the economy. Asset prices will inevitably drop. Think about that pool again. It's like draining the pool of its water. anything that's on top of it will go lower with it. Now, the valuations of risk asset classes are more or less determined by Fed policy and how much money there is in the system to be allocated to risk assets. So that being said, with all that being said, the time to buy Bitcoin will be when the Fed switches their stance from a tightening cycle, which we're in right now, to an easing cycle. Right now, they're committed on bringing inflation down and therefore tightening and removing dollars out of the economy. The more they continue on this path, the more dollars will be drained out, more dollars will be removed, and the more asset prices will adjust lower. However, once this cycle runs its course and likely takes us into a recession, they will be forced to drop interest rates and begin adding money into the economy in order to re-stimulate it. When that happens, I believe Bitcoin, along with the other stronger coins who survived this cycle, which I'll make another video on in the future, will find a bottom. And they'll present us with the opportunities to buy with large profit potentials. Very similar to what happened during the dot-com bottom with the internet stocks, and in 2008 with the general stock market and banking stocks. The weak companies will get cleansed out, but the strong will remain and flourish. So with that being said, that'll do it for this video. Please make sure to like, subscribe. I do want to continue putting out more content like this in order to help traders and investors navigate through these markets and the volatility that we've been seeing so far this year, which I think is here to stay for a while. Feel free to reach out to me through my website with any questions. I'll be happy to answer. Also, if you're interested, I just finished up and posted a mini course on how to start trading and investing while working full-time. It's all about the components needed to build a strong foundation for your trading and investing approach, which comes down to strategy and a process. You can watch the intro for free and determine whether or not it's a fit. I'll include the link to that in the show notes below. This link over here on my website will take you to the landing page of the course. So with that being said, thank you for watching. I hope you all have a good week ahead. See you guys here in the next video.